塞风往咱们南要开湖边湖岸家将近，一阵狂风么三个浪，雪高还这么深山呀湾。
Those are real photos, real scenes here at the CryptoBanter offices of Fred, Sheldon, Jimmy, and myself praying that the markets recover. But the markets we're talking about are not the crypto markets. Actually, the markets that we're watching today are the US stock market, because all eyes are on the US stock market to see whether it can shake off what happened yesterday. And right now, even though the futures were up about 400 points earlier, we see that the US market is actually losing steam and struggling to get back some of the losses. Yesterday, the market was down about 600 points, and now the market is up 190 points. So doesn't look like the US market is convinced, and that may mean a big risk for crypto. And so what I wanted to do today was I wanted to show you the best strategy that you can employ in times like this, when there are huge risks. Because the idea is that you want to make money and you want to keep the money. And so for that, you need to have a strategy. Today, we're going to talk about that strategy. We're also going to give away a lot of money. Today, I saw a text that I've got like $7 million to give away. $7.5 million that I have to give away. So either way, we're going to make the Banter community the biggest community in the world. It's going to be a huge show. When we get to 5,000 likes, we will give away that money. I promise you that. Don't tell BitBoy, because he'll start to give away money, and we don't want him to give away money. So stay tuned until the end. It's going to be a big one. Let's get this show on.
Get the fuck out of bed, bitch, go. Get up, get the guy, go. Time to wake up, bitch, get up. Get up, get up.
I see some people in the comments saying, please give me wife-changing money. So my wife looked at my crypto portfolio yesterday, and I think I must have had wife-changing money in my portfolio, because she's threatening to leave, but that's because there's so little money left in the portfolio. So it's like the opposite of the reason why you want wife-changing money. So you got to be careful about what kind of wife-changing money you make, because there's making wife-changing money where you leave your wife, and then there's making wife-changing money where she leaves you. So you got to make sure that you stay in the right category of wife-changing money. And if you want wife-changing money, then you're in the right place. If you want the good kind of wife-changing money, you're in the right place. You're watching Crypto Banter. We are here every single day. Good days, bad days, we are here. We are here to bring you credible, live, streaming, fun crypto coverage, because it should be fun. Crypto is about fun. Traditional finance is not fun. Crypto is fun. We want to do it in a credible way. That's why I think we're the only station in the world that doesn't accept any money from tokens to review their tokens. And you know that every time we talk about something, it's credible. So if you've just joined our channel, you guys are in the right place. Smash the like button, smash the subscribe button, because we look after the family. And by hitting that subscribe button, you become part of the family. And if you become part of the family, you can stand a chance to win. And today I'm going to give away a lot of money, but it is only to subscribers. I'm only giving away money to our subscribers. So what I'm going to do is I'm actually going to call up the subscribers. Let's quickly call up the subscribers. Let's look at our subscribers. Let's look at the numbers. Let's see the numbers. We've got to see the numbers and see whether people are subscribing to our channel, because the last I saw we had 383,730 people So now I'm going to say it again, and then I want to see you guys all subscribe. So subscribe to our channel, because if you subscribe to our channel, you're going to get life-changing money, not only in your crypto life, but you're also going to get life-changing money from us. We're going to give you life-changing money. And that's because today I'm going to be giving away BitDAO. I'm going to be giving away Orion Protocol. I'm going to show you guys how you can win your share of $7.5 million with BitDAO. And then I'm going to show you how to make money on the markets. So join the 383,745 people that are part of the family. Fred, what's up? 400,000 by the end of the week. That's like a lot of subscribers. Okay, by Monday. Let's aim for 400,000 subscribers by Monday. If we do, we'll give away a lot. Wow, look at the numbers going up. Alrighty, let's talk about the big stories of the day. What are we actually going to talk about today? This is a big story. Okay, so if you're part of the Banter family and you want to arrange a crypto meetup, or if you own a restaurant, or if you own a pub, or if you own an events venue, and you want to host a crypto meetup at your event, what you need to do is you need to email us at meetups@cryptobanter.com. What we will do then is we will inform our community that at 10 a.m. EST, maybe 1 hour before, people can come through and meet up at your venue, and you can screen Banter Fridays. So we'll screen the Banter Fridays at your venue, and then you can host a crypto meetup afterwards. So we're almost going to try and push the Banter community to come to your restaurant, to your pub, to your event. What we need from you, we need to know your address, the name, the city, how big your venue is. And what we will do is we'll start publishing it on a special website that we're going to arrange specifically for meetups at banter.com. You want that because that's going to get the Banter community together. And we did it in Cape Town this weekend. Sheldon did it in Cape Town, and about 100 people or 150 people walked in, not knowing each other, and they left taking selfies, being great friends, talking about crypto, and a lot of them are coming to work in our offices. So let's do this. If you have a friend and you want to host a crypto Banter meetup, and you want to host the crypto community and grow and to meet the community in person, just like this Banter fam says, then all you need to do is just tell us where you are. We will drive traffic to your organization. It's like a no-brainer. We will drive traffic to your organization, and then we will also cut to you so you can stream to us. So you can say, hey, we're here in Barcelona, here we're here in Mallorca, here we're here in India. You can stream into us, and you can show us the Banter community live from your thing. And what we want to do is we actually want to make this every single Friday. So it's going to be like a Friday meetup every single Friday. We will come to them around the world. We'll be in Dubai, we'll be in Lisbon, we'll be in a whole lot of other places, and we will drive Banter community meetups. It's going to be amazing. Remember, when we get to 5,000 likes today, that's when I start giving away the money, not 1 second before that. We also got some guests on the show today. We've got CryptoBirb coming in. He's always right. Birb's always right there, Freddie. Always bang on the money. Anyway, let's not make this like a BitBoy show. Let's get into the meat of the show immediately, and let's not talk about everything else. Meat and potatoes. So where are we? For those of you who have been living under a rock, world markets, crypto markets, every single market in the world is shaken by the news that a company in China called Evergrande, which is a construction company, one of the biggest construction companies in China, may default on its $300 billion worth of debt. And that is what is shaking the markets. Now, if you look at what happened in the markets yesterday and what's happening today, let's look specifically at the Dow Jones. So the Dow Jones, which is the US 30 index, yesterday went from 34,563 on the futures. It touched a low of 33,617 and it closed at about 33.9 or 34. Today, that market is a little bit up, which means that there is some calm in the market, but there's not confidence in the market, because if there was confidence, the markets would be flying, and they're not. In fact, what I saw earlier was that the European markets were actually flying. Let's quickly go check out the European markets. And I know a lot of you are going, well, why are you talking about stock markets? This is a crypto channel. Guys, this is the biggest risk to crypto, is if the stock markets go down. So these are the European markets, and all. Get out of the way. I hate it when they put these ads here. Close. Bye. Get away. Go away. Hold on, let's try and get rid of these stupid indices. Okay, so you've got the Brazilian Bovespa up 1%. In fact, if you look at all the markets, oh, she's back. Okay, if you look at all the markets are up about 1% today. So it does look like it's calm, except the US market's up about 0.4%. It looks like the US market is losing a bit of steam and hasn't yet shaken off the woes of what the potential effects are of this Evergrande defaulting on its debt. Why are people so worried about Evergrande defaulting on its debt? It's one property developer in China. Why is everyone so worried about this one property developer in China? The reason for that is that this one property developer in China has $300 billion worth of debt. The debt is owed to financial institutions, to banks, to some of its employees, to people that took their life savings and put their life savings on mortgage or on the down payment for houses that are still to be built. And all eyes on Evergrande to see if Evergrande is actually going to be able to pay its debt. And this is what we heard this morning. Let's have a look here. I did have a beautiful CNBC article for you. Let's have a look at what they're talking about Evergrande's debt and
right
what
now,
we know.
It's time for an update on the company at the center of a sudden debt crisis in China, Evergrande. This is one we talked about a lot yesterday. Eunice Yoon joins us from Beijing with the latest on that. Eunice, good morning or evening.
Good morning, Becky. Well, and good morning to you. Evergrande faces some key deadlines when the company has to make interest rate payments or interest payments on bonds, or it could risk default. The company's chairman is trying to convince staff as well as investors that the company will survive. In a letter to the staff for the Mid-Autumn Festival holiday, the chairman said that Evergrande will walk out of its darkest moment very soon and resume full-scale construction of its property projects as soon as possible. However, he failed to say exactly how the company plans to do that. S&P said it doesn't believe a rescue would come in the form of direct government support. The ratings agency said that it only sees Beijing stepping in if there is a, quote, far-reaching contagion causing multiple major developers to fail and posing systemic risk to the economy. Now, other property developers today made several statements to try to reassure investors that that wasn't going to happen. For example, the co-founders of mid-sized firm R&F said that they are going to inject $1 billion of their own capital into the company. That starts Tuesday, and that they sold their property management business to rival Country Garden. Other property developers, a lot of these small companies, announced share purchases or bond redemptions. Again, all in an effort, Becky, to try to make sure that people feel somewhat reassured that there isn't going to be a liquidity problem. And of course, all of this has been exaggerated because over the past couple of days and into tomorrow as well, the markets either here or in Hong Kong are closed for this holiday.
And Eunice,
Okay, so what we're hearing here is that China is actually still on holiday. China has taken the Autumn Festival. The Autumn Festival is it's almost like a barbecue day, and the stock markets in China have been closed. So no one actually knows how the Chinese markets are going to react to what happened. Remember, this broke on Sunday or Monday, depending which time zone you were in. And it since then, the Chinese stock markets have been closed. So we don't know how things are going to react. And that uncertainty means that we shouldn't be putting too much money into the markets. Why is everyone worried about Evergrande? Well, there are a few reasons why people are worried about Evergrande. The first thing is $300 billion is a lot of money. The Lehman Brothers crisis in 2008 was about the bailout package was about $600 billion. So when you're talking about $300 billion, that is a fortune of money. In fact, I think that I read a tweet somewhere. I'll see if I've got it for you guys. That says that $300 billion is like the GDP of some small countries. Fred, did we have a tweet like that? There was a tweet like that. I remember something like that. Let's quickly have a look at it. Hold on. We will find it for you guys. We will find it. We definitely will find it. Okay, we will find it during the course of the show, and we will show it to you guys. The bigger concern, though, is that it's not actually just about one company. It's about a systemic problem that may have spread to the entire Chinese real estate sector. Now let's put this into proportion. The Chinese demand makes up about 40 to 50% of total world consumption demand. So China is by far the biggest consumer in the world. And of that, let's say that Chinese real estate makes up about 5 to 10% of the total world consumption. And the concern is that the debt that is currently in Chinese development companies is quite high. And most of the debt actually, as you can see, matures in 2022, 2023, and 2024. 2021 is almost like a entry ticket into the debt game. Hey, how are you handling the current debt situation? And you can see that, with such small debt relative to what's about to happen in 2022, 2023, and 2024, we're already putting the Chinese system under strain. And that is exactly what people are worried about. In fact, it is so worrying that the market for credit default swaps. Now, a credit default swap is when somebody owns credit in a company and believes it's going to default, so he swaps that with somebody else who's willing to take the risk. And you can see the chart for credit default swaps has gone basically parabolic. It went up 44.88% in one day, which says that people are worried about China defaulting on their debt. And this is possibly because of a real estate bust. Remember, Chinese real estate goes down. What happens? Well, Chinese development companies can't repay their loans. The loans are due to banks. Banks then have to reduce the amount of credit. Chinese real estate slows down. This happens to Chinese real estate. Another thing happens. That is that iron ore, that aluminium, that all the stuff that you use to develop Chinese properties is now no longer being ordered. And if that happens, then you're going to get a slowdown in mining. Where is mining happening? Well, in Africa, in Brazil, in Australia, even in China. So you slow down the mining sector. So commodities are going to start going down. And so what people are worried about here, we're not really worried about one Evergrande company. We're actually worried about this whole thing spilling down into many, many other sectors of the economy. We see here that says, this is a tweet by Adam Temirkan. He says, Chinese property developers have a wall of debt coming for the next few years. 55 billion in 2022. These are just the repayments, and 45 billion in 2023. And this all happened because China started to push responsible credit practices onto the sector because they realized that things were spiraling out of control. And we'll talk about that in a second. Okay, so that is what the concerns are. And that is why we need to be completely cautious. Let's understand what actually caused these concerns. So what is it that actually caused this debt, or this caused us to be in the situation? And the answer may actually be something that is very positive for crypto. And I'm going to show you later that crypto has two risks and one opportunity. So there's one crypto related risk here that not many people are seeing. There's another one that I think is pretty obvious. And then there's one which shows a huge positive for crypto. That's what I want to show you guys today. So what caused this? What actually caused this property thing to happen? What if I told you that this whole thing is actually happening because of excessive money printing? Yeah, this whole thing is happening because of excessive money printing. And that what we're actually starting to see now is we're starting to see the world drowning in money. So, like when you drown, you die. So we're starting to see signs. Remember I said to you that we're getting so drunk on money stimulus. We're starting to get so much money. And this is the first sign that we may actually be drowning in money. We may actually be drowning in money. And I'll show you why. This is one of the big reasons why I think we're driving in money. It comes from this account called, I'm not even going to try to read it. It's called In Arte Darlo. Okay, you can read it. So this all started a while back. It has been seen at other defaults, including state-owned enterprises. And what China did was China put a whole lot of rules in place, lines. And one of the rules were that you couldn't have a net leverage of bigger than 100%. you had to have cash to short-term debt of bigger than 1. So basically, you had to have money to repay your debt, and you had to have a whole lot of other what they call the 3 red lines. Now, this is where it all went wrong. Listen to this. It says, one common practice of construction companies, again Evergrande excelled at, was to bid land prices way higher than the market. So that means that when they saw a piece of land that is worth, say, $1,000, they bid $2,000 for that piece of land. Why? It didn't matter to them because the risk got transferred to the flat buyers and the banks that financed the purchase. So basically what they're saying is, because there was so much money, they didn't mind paying more for the land, because ultimately the flat buyers would just absorb that cost and the banks would just lend more money because interest rates are low and the banks had to encourage spend after the COVID pandemic. And so what they used to do was they used to bid higher on land, transfer that to the flat owner, and effectively cause crazy inflation. That model worked for local governments, banks, and households because house prices were going up so much. So house prices just went up and up and up, and everybody was celebrating because even though they just bought a property for a certain amount of money, a week later, people were buying more and more and really driving up the price of property. They were driving up the price of property like crazy. And because bank interest rate was so low and the banks were giving so much interest, well, what do you get? You get a debt to household income ratio that has never been so high before. And that is exactly what we're trying to show you here. People are drowning in money. Because people are drowning in money and they believe that there's so much money in the economy, they start paying up for things. And when they start paying up for things, they are comfortable to take on more and more debt. And so the root of this problem, I mean, obviously it's financial negligence on Evergrande and on the whole real estate sector. But even worse than this, the root of this problem is that finally we're starting to see the signs of people drowning in stimulus, people drowning in money. That is what caused this whole thing. I just want to see if there's anything else as a result of years. Say again? Which one? Wait, let's put that on for you. Who tweeted that, Freddie?
That was Adam Cochran. Let me just give you a read here. So he says, it's estimated that they now managed to rack up more than $300 billion USD in debt. To put that in perspective, $300 billion USD is the entire GDP of countries like Ireland, Denmark, Hong Kong, or Portugal. And that is just the debt that Evergrande has. Yeah.
I mean, this could be systemic risk. This actually could be systemic risk. Okay, so we now understand how it happened and why it happened. We understand what's happening. We understand why it's happening. We understand the root cause. The most important thing is that you understand the root cause. This is happening because there's too much money in the market, and therefore people are willing to pay any price for property, and they're aping into the property market, and they're getting FOMO into the property market, and they're taking leverage into the property market. And now this whole house of cards is starting to crumble. This happened in 2008, and we're kind of seeing a repeat, but this time in China this year. So let's see. I want to see if there's any other tweets that I want to show you guys in that regard. Say again? No, we shouldn't do a mid-show prayer. We should go here and we should just look at what a Bloomberg analyst says. She says, Tracy Alloway is, and she says, China's Evergrande concerns are rippling through the market after the company halted the trading of its onshore bonds. Shares of other Chinese property developers and banks are falling. Yield on bonds spiked to the highest rate since March 2020. Basically, this is causing a credit crunch collapse, in China. And we don't know what the implications of this are going to be. We're going to have to wait a few days and a few weeks, but it is starting to show the cracks in the market. Are we expecting a collapse? Are we expecting the worst? So a very good friend of mine once said to me, he said, look after the downside, and the upside will take care of itself. That's what I want to talk to you guys about today. Because I think there are two risks here and one massive opportunity, and then one strategy that you have to adopt. And that's what we want to talk about here. So let's talk about the two risks very, very, very quickly. The first risk is that if the stock markets go down, if the Chinese stock market collapses, if there's a debt crunch, if there's a systematic collapse of the financial system, even though governments may come in and try and rescue and save everything, it's not good, because people will panic. And what they will do when they panic is they will leave risk on assets, stock markets, bonds, and they will move into, they'll move out of crypto and they will move into US dollars. They will move into cash. That we saw this in the COVID collapse. The minute the world started to panic, it becomes irrational. And it becomes irrational that people just ape into US dollars and say, I'd rather just hold US dollars. I just want to hold US dollars. When things are going badly, I just want to hold US dollars. It's a bad strategy, because when things are going badly, you should trade out of your US dollars and put it into risky assets. And that's what I want to talk to you guys about. But the rest of the world will ape into US dollars. Let me show you what happened last time that this happened. So I'm going to go to the Dixie. The Dixie is the dollar exchange. It shows how much people are aping into US dollars. And I know this is not like strictly crypto, but you need to understand this, because if you don't understand this, then you can't run a crypto strategy. Okay, let's look here. Okay, so let's look at March last year. See, that's March. Look what happened when the world worried about COVID. People went all into US dollars very, very, very quickly. And then they realized, oh my God, this is the best time to invest. And then they started to invest their money. We have to do the opposite of what people do. When they go into US dollars, you need to be investing. And when they go out of this, you need to be releasing your investments. We'll talk about that. So the one risk for crypto is that the markets will continue to go down. Bad risk. If it happens, we just sit tight, because what will happen is markets will go down and then they will come up. Exactly what happened. Let's look at the Dow Jones 30 in March 2020. Oh, okay, let's look at the US 30 futures. Okay, and let's go to the March 2020 chart. Let's have a look at March 2020. See, the market went all the way down when the dollar index went all the way up, and then people started to reinvest very, 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 very quickly back into the markets, as you can see. So that's what you want to be doing. The second risk is a risk that I'm not sure that many people have thought about, but the risk actually relates to Tether. Yeah, Tether, USDT and USDC. So why is that a risk? How is China and a property development company related to Tether? And how can that cause a crypto market crash? I don't know if you've ever thought about that, but I want to show you something. So if you look at the attestation report, which is kind of like an audit report that was published by Tether, Tether says that they own $30 billion worth of commercial paper and certificates of deposit. So basically, Tether own $30 billion worth of company debt. Now, Tether has confirmed that they don't own any company debt in Evergrande. So everyone thinks, okay, well, we're safe. Tether doesn't own any company debt in Evergrande, so not to worry. But what about company debt in companies that service Evergrande, that Evergrande may owe money to and may not be able to pay? What about company debt in banks that are owed money by Evergrande and by the rest of the real estate sector? You can see that Tether own $30 billion worth of company debt. Now that is $30 billion out of 69. So almost half of their investments are in company debt. And we don't know how much of that may collapse if there is a credit market collapse. And if that does happen, then the market may, Tether may actually crash the markets. So that's something that you got to think about. I don't think this is going to happen at all, but I do think we should have it onto our radar. So the one risk, stock market risk. The second risk is tether risk. In my opinion, tether risk pretty small, but worth keeping an eye on. Stock market risk, got to keep our eye on it. Stock markets go down. What's going to happen? Crypto is going to go down with it. All right. What's the positive? Because I said to you there's like 2 negatives and there's 1 positive. This is the fun part. The positive is that this is exactly why Bitcoin was created. And now Bitcoin is being tested. The reason why Bitcoin was created was because the system was going to drown in its own money. As I said to you, and I showed you that the system is already drowning in its own money. Traditional investments, bonds, company debt, equities, are all screwed because of all this money printing. And what we've realized now is that no matter how much money you want to print, you may print too much, and you may create an Evergrande situation where people start buying things that they actually can't really afford, and then one thing happens, pops the whole balloon, and it's the end of that whole cycle. And this is why Bitcoin was invented. This is what it was invented for. It was invested against this irresponsibility that is being done by the traditional system. It is designed to give you an alternative investment to the traditional investments, which are now all failing because they're part of an old and broken financial system. And the proof is in the pudding. There are 2 kinds of people. Those that understand and are on our side, and those that don't understand and are on the other side. And the ones that understand are buying Bitcoin right now. And I want to show you this. So what we're seeing is we are seeing that over the last periods of time, during the market downturn over the last few months, the amount of older coins moving on chain is decreasing, suggesting that the larger and more experienced Bitcoin holders are becoming less inclined to sell because they know why they bought Bitcoin in the first place. And then we look at the on-chain metrics yesterday. The Bitcoin exchange net position, negative. Yesterday, more Bitcoin moved off exchanges than onto exchanges. Yesterday, in the worst fucking day that you could ever imagine, what happened? More Bitcoin moved off exchanges than any day since August. Any day in the last month. What we're seeing here is we're seeing something amazing. Bitcoin is being put to the test. Maybe the price is not going up very fast because the whales are buying smartly, but what we do know is that whales are just keep accumulating. People who have seen the other side have seen the other side and have decided that they are exiting the old financial system. When they see things like Evergrande, they're saying, hey, I'm tapping out. I'm out of this. There's no way that I'm going to keep buying bonds when governments are destroying the financial system like this. I want something that is mathematically guaranteed. And so Bitcoin is being put to the test. And it's passing the test with flying colors. Not only that, we saw this. We saw that the USDC net exchange flow just reached a 3-month high. Yesterday. That means that yesterday, more money was put onto exchanges, or in the moving average, more money was put onto exchanges than any other day in the last 3 months. So that's the good news. The good news is that as the traditional financial system breaks, the smart people are starting to buy Bitcoin. And they are buying Bitcoin and they are hodling their Bitcoin. They're not selling their Bitcoin. Which means that Bitcoin is doing exactly what it was designed to do. Bitcoin is doing exactly what it was designed to do to protect you against the broken financial system. And in a period where the financial system is showing the biggest cracks, people are running to Bitcoin. Now, if this would have happened in 2017 or 2018, Bitcoin would have dumped 50% yesterday. Bitcoin dumped 10 to 15%. And if you look at it, again, I'm showing you the smart money was buying. So there are negatives. The negatives are that there may be some tether risk and USDC risk because they're both invested in commercial paper. The other negative is that stock markets may collapse, but the positive is that Bitcoin is doing exactly what it was supposed to do. And the smart money is buying. So you got to make a decision. Are you part of the smart money or are you part of the dumb money? The money that sold yesterday. And I think there was a tweet. I don't know if I've got it. I may have just deleted it. But there was a tweet that showed that the people that got liquidated yesterday were the short-term holders. The short-term spinach hands holders, they were the ones who were liquidated yesterday. 254,000 accounts were liquidated. But most of them were short-term holders. And who was buying? The whales. The people taking it off exchanges. I'll tell you who else was buying. Mr. CryptoBirb was buying. Mr. CryptoBirb was buying yesterday. Am I right, Birb? Am I right?
Yes, you are very right. You are very right. Yesterday, today, you're right.
Okay, now I want to know why you were buying.
Like aside from the on-chain metrics that you just said and revealed, there's been definitely like a constant trend, like with the tendencies, from the whales. There's of course like very good friend of mine, Will Clemente, right, on Twitter, who's actually just soaring right now, and he's also professional in the on-chain industry. But the overall like whales money being kept on exchanges are probably right now at the all-time lows. Like even like just I don't think it's been like this unprecedented case before, but like literally whales are not keeping money on the exchanges. Like they're not really having too much of intentions to sell for long term just as of yet. And there are a couple of other reasons for that, of course, because me being the certified market technician, I kind of like pay most attention to the market charts, to the actual charts. So if we can actually just play the charts, let me actually just post.
Yeah, let's look at your charts.
Yes, I have a couple of them prepared. But long story short, what is something that you recently pay a lot of attention to is the volume weighted average prices, right? So if we apply a very simple metric that is anchored view up, and if you anchor that at the let's say the most recent leg up, which was pretty much like leading Bitcoin all the way from our peanut of hope, if you will, something that you and I were bringing on the show. We created that.
We did that.
We were talking about it, right? And I was discussing back then, how this potential tiny, just thing, this tiny peanut of hope could actually evolve into something big, which it eventually did. And the reason for that was, that the bears got over complacent. There was like a peak of bearish euphoria, right? Which is, as a matter of fact, peak of fear, the climax of fear. And right now we are somewhat seeing some similar changes to that, right? But if you anchor that at the same time, like as I said, at the final kind of like leg up, which led to the massive breakout, it means that this entire move up was technically very significant and important, right? Because this was like different than the previous failed rallies. And like if you analyze that as well and account the, let's say, all-time highs anchored, measured like a view up, then it tells you the average price of Bitcoin ever since the market peaked in all-time highs so far. And it tells you that the average fair price of Bitcoin decided and gauging by the volume is 42 exactly 234, right? Which is right now Bitcoin approaching at this very moment. The fair price decided, upon the volume of this leg up, was 43,766. So it tells me that as long as the price of Bitcoin is below its averages, below its fair prices decided by some metrics, by volume or by the overall price history, if we don't count the volume itself, then it is something that signals to you that the market prices Bitcoin too low versus its fair price, right, based on volume. So the information that it tells you is that it's pretty much just a good buying opportunity, and the further it deviates, just below its averages, like it did in here, like it did with the peanut of hope of the 21st of July, right, which we signaled the bottom for. So the further it deviates, the better buying opportunity it gets.
But it is showing you that you can go down quite a bit, right?
Well,
We were
you know,
down
it
much
can,
below.
there is always risk. Like you can like I keep repeating, you know, there is no like certainty that that we all don't die and don't wake up tomorrow, just for an example, right? There's like planetary may crash into an earth and we all die. But assuming that things, don't change on a fundamental basis, assuming there's no like unpredicted black swan event like this COVID crash from last year, or assuming there's no like military conflicts, just emergency or something, like if the overall external factors of the economics are not changed too much, then we could anticipate that Bitcoin has just reverted to its mean value, to its fair value. And as long as it gets around these values after, well, somewhat of 25% decline, well, this is far more better buying opportunity than selling opportunity for short term, if you ask me, right? Because we have just made kind of like this full circle, this 180-degree pivot, where we actually came back to the levels from the breakout days from early August. And
What about,
what it tells me is that Bitcoin's just come back to its fair prices, and that's the metric that I guess like.
what
works.
about stock markets? I mean, the stock market's not looking good. If I cross now to the Dow Jones just gave back all of its gains for today, and it's now again starting to look nervous. I mean, it's now up 14 points. It's about to go negative again.
Yeah.
Are you worried about stock markets?
Yeah. So this is yes and no, just to be honest, because the short term worries, the short term, I should say, instability that you see on the market is definitely not something that would stop Fed from printing more money, right? Just like you were saying, and there is like something that that is very significant, because first of all, I'm not sure like many people remember, but last year in February, I was talking about how I disliked this bearish divergence between the Dow Jones Industrials and Dow Jones Transportational average, which eventually led to the COVID crash, right? And I was warning about the crash coming about 2-3 weeks before that actually happened. And this is actually something that people can scroll through my feed and they'll find a tweet about it. And there is some pattern, there is some similar pattern, right, where these two averages kind of like dissect. They follow different angles, they follow different directions. As a matter of fact, the Dow Jones Industrials make, as the overall industrial stock companies, make new highs, make new lows, which are higher than the prior ones, while this is actually diverging in the opposite direction. So which tells me that the transportational average does not confirm the industrial average, which kind of like just I should say disrupts the fundamental foundational kind of like a principle of the Dove theory, if you will, that the averages do not confirm each other, right? So it tells me about the overall short-term instability of the market as a whole, right? And on top of that, you have a lot of FUD coming from Evergrande, of course, from China, right? There's like not a single point of doubt that the entire world is right now in this overall financial crisis, which is just pretty much just keeping us blind in a way, under like not really revealing all the truth, because the charts are looking fine, right? So how can we be in a recession like if the charts are going up, of course? And this is actually the case. Like this entire inflationary bubble that the global governments, central banks got ourselves in is a one-way ticket, and in my opinion, it is going to lead to brand new kind of like a crash, probably the same or not even worse, if not even worse than Great Depression of 1929. Well, this is going to literally blow up this entire financial system as we know. There's not going to be like printed currencies anymore.
You don't think that's happening right now?
No, that's not happening right now. So this divergence, on the contrary to the current ones, this took years, right? The market was kind of like substantially, getting too much heat from the printers, like over years. Right now, we are talking about like what, 2-3 months period. So I read it more as a short-term warning, right? Even if you watch, of course, the S&P 500 post-Standard & Poor's, this is some old chart, but if you apply a very simple metric, I don't know, like moving average, like 200-day moving average, right? Let's just play it, or 200-week moving average. Like what is just telling you is, again, any time that the market was pretty much like just going down, it was very fast bought up, right? The overall tendency is upwards, and like right now, it seems and appears to me that the Feds and the overall global central banking policy is that when the markets, just go down, just print more money, right? And it would just go back again. So there is a saying, this popular saying that claims, do not fight the Fed, do not fight the tape, do not fight the trend. And if I were here, I would not really try to catch the bottom, because there were many people in the past decades trying to catch the bottom, and Fed, kept everybody surprised each and every single time, printing more money and just buying back the entire stock market. So I assume the same would happen again.
Amazing. Birb, we love you, brother. Fucking, you are such a big part of our family. So much love, brother. So much. Guys, follow Birb on Twitter. His channel is also in the bottom, in the description link. Birb is part of the family. I don't know where I'd be in my crypto career without this guy. I really don't. He's been such an anchor, such a person of hope. Brother, thank you. Much love.
Much love, friend. All the best to you guys.
Alrighty, so that's Birb. So he's not expecting the worst. Now, let's talk about strategy, because I promised you guys strategy and I promised you guys giveaway, and I've got to end the show very, very, very soon. So strategy, what are we actually doing in this market? So what we do know for sure is that there is turbulence, hurdles. There's stuff going to happen ahead. We don't know exactly what it is that's going to happen. I lost the word there, so Freddie's sitting here laughing now. He's laughing his head off. I wish I could show you, but I'm not going to show you. I lost the word. But what you can see is that there is some shit ahead. And if there is some shit ahead, we have to have a strategy. And my strategy is to say, I would rather not lose money than make money. And that's the attitude that you guys have got to have. You've got to have a strategy that says, you know what, let's protect ourselves against losses, worry about the downside, and the upside will take care of itself. Let's put ourselves in a position where we are not worried about the downside, and then let the upside take care of itself. So what I would do, and I said this to you guys before, number one, the first rule, the first and most important rule, get the fuck out of garbage. If you're holding shitcoin because you thought shitcoin would do 100x, get out of shitcoin today before it's too late. If we have one more day drop in the market, shitcoin is going to go all the way down. Take shitcoin, put some shitcoin into cash and some shitcoin into 10x gems. We'll publish the 10x gems on my Twitter account after the show, also on our Instagram account. Get out of shitcoin, get into 10x gems. Don't say I didn't tell you. Tomorrow, if the market goes down again, shitcoins are going down another 10-15%. If you own shitcoins, sorry for you, you're not going to have a chance to get your money back. Then, what else do you want to do? You want to sit on the sidelines and wait for some kind of direction. Because the idea is to make and keep life-changing money, not to make and lose life-changing money. If you make and lose life-changing money, it is much worse than not making life-changing money ever. Because if you make and lose life-changing money, you're going to go into depression. Because on one hand, you're going to make so much and then you're going to lose it. Rather don't make it, because then you still won't have money, but you won't be in a depression. You want to make and keep life-changing money. And if you want to make and keep life-changing money, what you have to do is you have to have patience. You have to get out of garbage. You have to sit on the sidelines and make sure that you survive. The market will reward those that can survive. So patience is key. This is not a time to be chasing a pump. You can either dollar cost average on the way down, or you can sit on your hands and do nothing for a while. There's nothing wrong with that. And you know why there's nothing wrong with that? Because crypto is the land of opportunity. For the last 10 years, crypto has just been giving and giving and giving. Parabolic run after parabolic run after parabolic run. The result is that you don't need to chase parabolic runs. Once it's NFTs, then it's NFT video gaming, then it's decentralized exchanges, then it's the Avalanche ecosystem, then it's the Solana ecosystem. There are so many opportunities in crypto that if you miss this opportunity, it's okay, because there will be 100 other opportunities next week, next month, and next year. Don't chase the opportunities in a time where there is high risk. In a time where there is high risk, protect your money. Don't worry about not making an upside. Protect yourself from the downside so that you can live to fight another day. So what I'm saying to you guys is, I don't think that the market is cheap enough. I think the market is still looking for direction. I would prefer the market to crash so that I could say to you guys, I think the market has crashed and I think we should be buying. But right now, the market hasn't crashed. The market has gone a little bit down. It's not cheap enough to buy. And a lot of people are saying to you that you should be buying this dip. I'm saying to you, don't buy this dip. Wait. If the market goes down further, it's going to crash down because that means that there's global instability. And then you're going to get things at half the price that you would have got them today. If the market goes up a little bit and finds direction, that's when we'll start buying. And you know what? We may not make as much money as we would have made, but we will protect ourselves from the downside. And then we'll live to fight another day. And because we're in crypto, because we're so lucky, because we're in an industry that just keeps giving us opportunities, we may miss a small part of this opportunity. But we will live to fight another day if this market goes down. And that's what I want from you guys. Get out of shitcoin. Take your money from shitcoin, put some of it into US dollars so that you can keep buying, and other parts of it into Bitcoin, Ethereum, and some of the 10x gems, which I will publish on my Twitter. Join my Twitter at CryptoManRand today. I'm going to publish it for you later. I just didn't have time before the show to publish the whole buy list. And then sit on your hands and keep remembering that Ran said to you, don't chase the opportunity. We're not seeing panic right now. No one's panicking. The prices aren't down. I want to show you something. I just want to give you perspective. Let me give you quickly perspective. I know I'm running. Fred's looking at me. He says, you're running out of time. Let me show you something. And I'm using Solana, which is one of my favorite tokens, but I just have to give you perspective. Okay? Look at where we are on Solana. We're not even at a level of a month ago. We're at levels of 3 weeks ago, 2.5 weeks ago. That's not cheap. Let's look at Fantom. Let me show you Fantom. Okay, Fantom. We are at prices that we were at on the 5th of September. That's not cheap. Let's look at Avalanche. Let's not look at market cap. Let's look at Avalanche against Tether. Okay, we are at levels that we haven't seen since the 15th of September. That is not cheap. Cheap is where they were 2 months ago, and Avalanche 2 months ago was $11, and it's now $60. Solana 2 months ago was at $28. That's cheap. $140 is not cheap. Guys, we are looking for cheap. We are not looking to buy dips for the sake of buying dips. We are looking for cheap. And in a time like this, where there is so much trepidation in the market, where there's so many hurdles in this market, sit on your hands. These things are not cheap enough yet. Let's wait. We may miss some upside, but we'll learn and we'll live to fight another day. And that's all that I want. I want you guys to make, and I want you to keep wife-changing money. And I don't want your wife to have to change you because you don't have money. That's what I'm saying. Got it? So that's it for today. I did promise you giveaways. Giveaways? Okay, let's talk about... Okay, so here's the story. I'm going to read this. So ByBit is giving you 5 million bits, which is $7.5 million worth of ByBit. What they're doing is they're taking a snapshot of your account with the CryptoBanter referral link from the 22nd to 26th of September. They're taking a snapshot of your account. The more money you have in your account, the more BitDAO you can win. So if you have opened an account with the CryptoBanter description, go to your account, fund it. Even if you take your money out afterwards, just fund it. Keep the money there from the 22nd to the 26th so that they take the snapshot, and then they're going to just airdrop you. I'm going to make sure they airdrop you BitDAO tokens for free, but only if you fund the account. So do that. Then let's give away quickly. We've got like 1 minute. Let's give away $100 worth of Orion protocol. This guy wins. Dennis Musai, best channel on YouTube by far. You win $100 worth of Orion tokens. Arkadiusz Bogdansky, he wins. Freddie, pick another one. Okay, share some love, Uncle Ron. Cheers from Peru. Alvaro, you win $200. You're giving $200. $200 worth of Orion protocol. $200. I like Peru. I've been to Peru. I went to Machu Picchu and I took ayahuasca there. It was amazing, fantastic. Bit of a mind-altering experience, but unbelievable. We'll talk about that on another show on the Psychedelic channel. Who else? That was in Alvaro's country, bro. Okay, one more. Let's go. One more, and then we'll do one BitDAO. Okay, I got a great wife. Don't want to change her. Life-changing money would be totally okay. Okay, so then you need to give us money. No, I'm kidding. Okay, Michal, you get yourself $100 worth of Orion, and then let's do one BitDAO. Somebody who has a ByBit account with the CryptoBanter description. Yalla, here, run. Here, I've got one. His name is Salkiran Thakur. S-A-L-K, Salkiran Thakur. He is from the Emirates, it looks like. Yalla, he says. Yalla, I'll give you yalla. We'll give him a BitDAO. Only if he's got a BitDAO account. Yalla. Let's see. There are super chats here. Some of them don't have anything, but just don't tell BitBoy that Orion is wife-changing money. Lance D'Souza, he gets $100 worth of Orion token because he didn't tell BitBoy. Okay, now that is it for today. Sit on your hands, wait, watch my Twitter account at CryptoManRun. I'm going to be posting if I buy anything. Like I posted yesterday, I was sitting on my hands. I will tell you if I'm buying anything. We have to watch the markets. And if I watch the markets right now, we can take one last look at the US markets to see if they are getting worried. Are the US markets getting worried? They are neutral. Got to be careful. They just gave back all their gains from yesterday. Be careful out there. Let's make sure that we live to fight another day. Let's worry about the downside and let the upside take care of itself. I love you guys madly. I want you guys all to make life-changing money. I will see you guys again tomorrow. Until then, stay well out there. Keep yourselves out of trouble.
三风望这么南要开湖边湖岸家将近，一阵狂风么三个浪，雪高还这么深山呀湾。
Have you ever needed the toilet? Have you ever needed the toilet so badly that you thought you were going to explode?
Yeah, absolutely. I think I get it 2 out of every 5 shows.
That's how I felt from the show. That's how I felt from the beginning of the show, from the first minute of the show until the last minute of the show. When Birb was talking, I thought that there was going to be a minor explosion here at the office.
I could see he started sweating, bro. I was a bit worried.
I had to stop drinking water.